And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Welcome to the market forecast for Monday, October the 11th. I'm John Hoagland. Thanks, as always, for trusting me with your time. As always, it's all about context, risk management, and patience for trading. This morning, it is Indigenous Peoples Day, Columbus Day. It's a U.S. holiday. The federal government will be closed, federal offices anyway. Banks, bond markets are closed. Stocks are open. We're going to be looking at probably some limited participation in these markets. I see a couple of questions here. Daniel, you can trade funded accounts today. Today is a holiday, but it's not a holiday that you have to remain flat for. So you are free to trade today. Just remember, some of the participation will probably be a little bit light today. As far as the rest of the week, tomorrow, job opens and labor turnover, the Red Book due out tomorrow. CPI at 7:30 on Wednesday may be a pretty impactful number. FOMC minutes due out at 1 p.m. Central on Wednesday. Thursday, jobless claims as usual. PPI final demand could be an impactful number for us. All eyes seem to be on inflation these days. Nat gas also will be impactful for you nat gas traders on Wednesday at 9:30 Central. And then because of that today, from what I'm seeing, the EIA petroleum status report will be at 10 o'clock on Thursday. We'll, of course, be keeping you abreast of when that's due to happen. And then Friday, we have retail sales, Empire State, New York Manufacturing Index, import-export prices, business inventories, and the Michigan Consumer Sentiment. So not a very thick week of economic information due out. However, Wednesday, we do have the beginning of Q3 earnings, with many of our major banks announcing their earnings on Wednesday. U.S. stocks this morning are set to open lower on this holiday Monday as inflation and stagnation fears come into play, especially after last week's dismal employment numbers. Goldman has lowered growth expectations for 2021 to 2022 by 0.1% of the GDP. Crude prices are now up above $81. Hope you gassed up this weekend, and if you do a lot of driving, you're certainly going to begin to feel that as far as the inflation is concerned. Supply chain issues keep understocked shelves in overpriced stores. Airlines canceled flights all over the United States, mostly, I guess, in Tampa this weekend, claiming it was weather, but also we're pretty sure it was about staffing issues. How many airline workers got fired? Wednesday, again, begins the Q3 earnings season. As always, we're hoping that you've had a good weekend, restful, and the opportunity to spend a little time away from the markets. If you're in the markets already this morning, hopefully you've got things going your way. As always, make sure you hit the lucky like button. Share, comment, question, feedback, and heckling are always welcome. We are looking at the VIX this morning. VIX is up about 6%, 1990, just under 20. The dollar index up slightly, 94.24, and the 10-year is closed. No information coming from rates for the 10-year or any of the Treasury instruments. As always, got to say good morning to everybody. But first, I want to say, I think tomorrow morning we're just going to try this for a while. We're going to start at 7:45, so we've got a little bit more time to work our way through the charts, to really think about what's going on in these markets, and we're going to try that for a while. I'm making an executive decision, and we're going to do that starting tomorrow, 7:45 a.m. Central Time. The market forecast will begin. I think that'll give us more time, give us some time to really get settled in before the equities open up, and we'll see how that works for a little while. On another bit of information for you, Dr. Menaker is not going to be available this Wednesday to do market therapy. He's going to be away, probably taking a vacation or something, but we'll look forward to the next opportunity to spend some time with the good doctor, and I apologize for not being able to present that to you this week. But we do have group coaching. I've just put the link for group coaching in the chat. That is on Wednesday. Probably next week, we're going to be having two group coaching sessions throughout the week, on Monday and then again on Wednesday. So I'll look forward to spending a little bit more time with everybody. All right. Got to say good morning to everyone. Theo, first one in the room, you win the prize, Theo. George, yes, good morning. Daniel, you can trade in funded accounts today, not a problem. Brian, George, my brother Rick, good morning. We missed you on Friday. Friday was your birthday, but glad you're here today. John, good morning. Snow in Calgary. I understand through many of the Rockies, they're seeing a little bit of snow this morning. Dr. VJ, good morning. Zoraine, Jason, Jimmy Decker is here. The markets are moving. Joshua, today is a holiday. Yes, it is Indigenous Peoples Day and Columbus Day. So the federal offices, again, banks, and bond markets are closed today. So you're going to probably see some lower volume, some lighter participation today. Just keep that in mind. PD Legend, good morning. Walt, Harry, good morning. Jimmy, Nelson, Alfred, are good till canceled orders filled and extended hours trading? Yes, they will be. Good till canceled orders are in the market until you cancel them. So yes, they will get filled in extended hours trading. Chris, Cam, Charles, Joshua, good morning. Miguel, Tova, Charles, Gary Patrick DeLacy. Are you related to Lacey, my puppy? Good morning to you. Rob T, Kevin. Yeah, combines can trade also. Yes. Don K, good morning to everybody. So tomorrow morning, don't forget, 7:45. It's a little early. I'm going to be up a little bit earlier so I can do my research and put together some, hopefully, good information for everybody. You're going to take a quick look here into the opening range in crude oil, which, a little bit of action here. Opening range appears to be left at the high of the session. It is a rare, very substantial opening range of over 40 ticks. So that's going to be a little bit of an issue for all of us trying to take that opening range trade this morning. So I've got the daily up. Let's jump in and take a look at what we're seeing in these charts this morning. So crude oil traded all the way up to $82 last night, 82 and change. It's currently trading just about 84. So we are seeing more continuation to the upside, more looking like upside continuation, but it is roll week again for crude oil. The calendar says Friday the 15th is rollover day. It may or may not happen that day, but we do have to remember that rollover does have an impact on the marketplace. Just looking technically at this, the weekly kickoff high has expanded, largely a measured move. The weekly kickoff high 85.20, low 75.10. Write those down if you'd like to. And We're looking for this market to continue to move higher. Volume has been holding up pretty well on up days. We did lose 13,000 of open interest on Friday. Could that have just been a profit-taking event? The market's ready to open and did open with a gap to the upside. Structure, inflation, supply issues. What is going to stop this move to the upside? Obviously, the upside structure is intact on the daily chart. What is going to stop it? All right. Now, swing highs on the weekly chart. The next swing high that I can even pick out on the weekly chart is $95 a barrel. Above that, it's $107.70 a barrel. The next swing highs. That means there's a lot of space up above. These swing highs go back. Oh man, I didn't even write it down. It's so long ago. It's back in the teens of the years. I'm thinking 17 is the last time we had a nice coiling activity that broke to the downside and put us down to lows up around $25. So we've got plenty of space up above if this market is going to continue to the upside. And the way things are looking with supply and demand increasing, supply seemingly harder to come by, what does that mean for us today? Well, here's the 30-minute chart. This pink line is last week's high. We're opening above last week's high. We're opening above last week's range. We're opening above Friday's range, well above settlement from Friday, which was 79.35. Put that on your charts. We've got a whole lot of overnight longs in this market, which may be enough to give us an opportunity for a pullback to look for that opportunity to buy this market in some kind of weakness. We are out of balance in all time frames. The opening range trade already providing an opportunity for us if we were able to take it. It was pretty substantial. A 40-tick opening range is pretty big. It just increases the risk of it. But if you've taken it and you're sitting in profit, good for you. Got to be thinking risk first, and patience pays. If you didn't catch the opening range trade, be patient. Wait for the market to come to you and tell you this is an opportunity. This is something for us to be thinking about. Okay. Those swing highs, $95 and $107 are really scary numbers for anybody who fills their car with gasoline or heating oil or all of these things. It's just, we don't want it to go that way. Unfortunately, technically, this is what things are saying. So again, today, if you haven't taken the opening range trade, here we can see it on the 1-minute chart. Here's the opening range. So 81.44 all the way down to 81.02, a 40-point opening range, 40-tick opening range. That's pretty big. We're going to see if we can't stay below it if we're in that trade. But be cautious because, again, remember, there's limited participants today. A lot of traders are going to be just speculators and shorter time frame traders. Let's take a look at the E-mini S&Ps now. All right. Let's make this big. So our island top on Labor Day Monday, our bearish engulfing pattern certainly sent this market in a different direction, and it is holding in that direction. Last week's high was right up against this trend line, which is a rather kind of a loose trend line. It's kind of amazing that it actually ceased to continue to the upside there. But remember, this market is a market that we are looking to sell strength. Medium time frame structure lower remains. Attempts at rallies have cut off volume. Okay, we had a big up day this day. It cut off volume. We had an inside day on Friday. It cut off volume. Open interest, we lost 13,000 on Friday. So no big push to the upside with new buying coming in. Uncertainty. I mean, there's still a lot of uncertainty. We talked about just a couple of them in this morning. Goldman lowering expectations, crude rising, unemployment, supply chain issues, airline issues, a lot of arm bending going on in Washington. Markets don't like uncertainty, so I'm still looking at this as a market that I want to sell strength. Take a look at the 30-minute chart. There's some information here we might find interesting. Okay, it doesn't look like it's going to happen, but Thursday and Friday, we gapped open to Thursday. We were unable to close the gap Friday. If we close with a gap from Friday's low, that could create another island top. It's looking less like that's going to happen because we have maybe some overnight inventory to the short side, taking price back to settlement. This might be actually offering us a pretty decent opportunity to look for some area of strength with which to look for shorts. Look at the weekly kickoff levels here. 44.38 to the upside, 43.10 to the downside. It's rather substantial. It's a large range. But remember, these are not meant for daily use. These are meant for visuals and technicals and a little bit of math and a little bit of spidey sense as to where longer time frame traders will look to adjust inventory. We've been testing down below this level, but we really haven't found much acceptance below it. So I'm going to be, again, looking for day time frame opportunities. Back to the daily chart. Where are we? Well, 1, 2. Are we falling into an area of balance here? We had just left an area of balance. Are we creating a new area of balance? Try and stay patient. Okay, the market really kind of coming back into value or back into range. Now what this means to me is, are we going to go and test value low? If we can test value low and we can't accept inside of value, this might be a very interesting spot for us to look for a short. Market a little bit short, coming back into settlement, but this week, this value low from Friday is going to be somewhat pivotal for us. Finding acceptance inside of it pushes us to the upper extreme of it at some point in the day today. So a little target-rich environment here between settlement and value area low from Friday, possibly. Just kind of looking at things as we get started. Nasdaq, it's almost the same situation. Okay, weak medium time frame structure to the downside. Rallies, slowing volume. Open interest on Friday, moot. We lost 500 contracts, no big deal. Short time frame control. It's it's a holiday, and just the location. Take a look at the 30. So almost, are we going to? Could it happen? Do we see the possibility of an island top here? If we can't close this gap after the open, that's going to create another island top and another quite possible push to the downside. Weekly kickoff low, 14,624. It remains. We looked below it. We rejected it as of Friday and as of Thursday and Friday. Now, if we can leave this island top up here, this could be an interesting opportunity for us. If we can't close the gap relatively early, remember gap rules. We've got some overnight shorts here. If the shorts can't close the gap, we go in the direction of the gap, which also would create another island top. So a lot of interesting things going on in these markets early here this week. Gold. 8th day imbalance. Boy, we really took a shot at breaking out to that upside on Friday after that unemployment number, but no, it was denied. So we're still in short time frame control. We're still in balance. This big spike to the upside is more of an anomaly than anything we really have to worry about. It did put in the weekly high, the weekly low right here. We added 700 in open interest on Friday. Not a huge number, but I'm thinking more of that was on the rejection of higher pricing, adding shorts to this market. Take a look at the 30. Here's our spike. Here's our return. Settlement, 1757.40. We've got gap. We closed the gap. No gap now. Overnight inventory, even. Patience. A lot of this, again, is going to center around whether we accept value from Friday or whether it is rejected. It's a target-rich environment up here. We've got our settlement, our point of control from Friday at 1758.10. We've got settlement at 1757.40. It's a target-rich environment here. If we accept, we could return to high of value from Friday by the end of the session. If we reject, we've got last week's low and then space down below that. And for the euro, we have 3 days of balance. We've got a little bear flag that broke out to the downside nicely. This trend line was left here because there's 1, 2, 3, 4, 5, 6 points of contact. What was resistance sometimes becomes support, and it was supportive last week. Week before that, it was supportive. Now we're just kind of falling into balance. Is this going to be another bear flag if we can break out the downside? We have an inside extended trading hour range, not looking at anything huge. The volume has been largely holding up. Open interest was moot. We added 800 to the upside on Friday. That might be something interesting. When we look at the 30-minute chart, settlement here, 115.91. Market really kind of opening in range and looking to reject it. 3 days of overall balance. If you look at the extended trading hours, we come in right up here. This week's high, this week's low. When you look at what we're looking at from the daily chart, there's not a lot of visuals down here. There's nothing really for traders to kind of focus on. So it's going to take some sort of change in the dollar, some other sort of change for us, I think, to continue this move to the downside. So, just suggesting inside range, inside value, try and stay patient. I'm thinking that the overnight low and overnight high might be actually better levels for us to look for opportunity. Number one, because they allow us to limit risk, and number two, this high here is largely the upper extreme of the short time frame area of balance that we're currently in. To the 10-year, which shouldn't be doing much today. Bond markets are relatively closed. Volume and open interest Friday, healthy to the downside. You see this market continuing to push to the downside. We added 43,000 in open interest on the downside move, the continuation move to the downside. It's a previous weekly kickoff level that we basically traded right to. It's also the last week's low-ish. Yes, last week's low. On a measured move, that takes us down to the weekly kickoff low, which is 130.09, 130 and 9/30 seconds. Could be a good eventual target for this move to the downside. Does it bring in any swing lows? Sorta. Take a look at the 30-minute chart. We're going to have a gap here, which we do have. Settlement is all the way up here, 131.04.5 ticks. And we've got some overnight shorts here. Are there longer time frame traders available to continue this push to the downside, or are we going to eventually just see our overnight shorts give up and take price back towards settlement, which, by the way, is a target-rich environment? Should we have all of our participants available? We have settlement, we have point of control, which is right at settlement. We also have the value area low. We've opened outside of range. Inability to close the gap has us looking for opportunities to the short side, but there, again, all of our visuals in short time frame are above the market. And now let's take a look at the natural gas, which is showing some signs of weakness here. We mentioned last week that we had a bearish engulfing pattern. Well, it's not the first one we've had. Here's a piercing pattern. Here's an engulfing pattern. Here's an engulfing pattern. We tested up to this high here, which is several years old. We've had trouble getting back through there. We've got our weekly kickoff high and low, 5,855 on the upside, which we've kind of left there, even though we've tested above it, and 153 to the downside, looking like we're heading to that direction. Inside extended trading hour range, no. Short time frame control, perhaps. We just had this move to the downside, 6:30 this morning. We were in an inside day. That now has changed. Open interest has been dropping as we have been making this turn from the high to a potential market state change, which would occur at weekly kickoff low. And we lost another 9,800 in open interest yesterday. I think it was, I should say Friday. I think Thursday we lost about 9,300 in open interest. So there's money coming out of this, and I'm thinking it's probably long liquidation, people trying to protect some of the profits that they've had on the way up. 30-minute chart. So settlement, a little bit of a gap, a weekend gap here. That has now been closed. Any longs from overnight also reconciled. We've got a gap down below here. We've got weekly kickoff low, which is also a naked point of control. Most all of our, this is a naked point of control up here, but almost all of our visuals are down below the market. And if that's the focus, if that's the visual that traders are looking at, we're going to head to that direction. I'm not looking to fight this move to the downside unless we can get down to that weekly kickoff high, close this gap, and see if we can limit risk down there. All right? So this is the reason why we're going to start the forecast 15 minutes earlier tomorrow. We've only got 2 minutes before the equities open. I'm going to have some time to kind of answer some of the questions. And does anyone know what time the London 2 o'clock Central, 2 a.m. Central is when we see the volume start to spike when London opens up. Okay? All right, let's take our deep breath. Stay humble, grateful, and creative, and patient in your trading today. Remember, there's not a lot of major participants in these markets today. Keep that in mind. I'm going to put the link in again here for group coaching on Wednesday, adding another session next week on Monday. Don't forget, tomorrow morning, the forecast starts at 7:45. We'll have a much more, I think, relaxed and a lot more time to take a look and think clearly about the markets. Get out there and profit today. Trade well. Dan will see you for the market recap today at 3 o'clock. Looking forward to a good trading day. I'll see you in the pit in about a minute.